Welcome back to Yahoo Finance Live, everyone. Mortgage rates just keep climbing higher. Freddie Mac has average mortgage rates at 4.72% this week. That's up from 4.67% last week. Rates have jumped nearly a full percentage point since the first week of March and 1.5 points from the beginning of the year. This is now the fastest three-month mortgage rate rise since May of 1994. With these surging rates comes a drop in mortgage applications, which are down 3% from last week, and refinancing applications, which are down 10%, according to the Mortgage Bankers Association. But are these rates affecting the rental market? For more on this, let's bring in Jon Ziglar, who is the CEO of RentPath. Jon, thanks for taking the time here with us today. Is there anything showing up in the data to this point, even as we have rising mortgage rates, that is also pushing rent prices higher in tandem?
Rent prices have been rising significantly over the past 2 years. Just in the last year, the average rate for a one-bedroom apartment across the U.S. has gone up about 24%. So we are seeing those rates continue to increase. Now, behind the numbers, by the way, the majority of that increase has been in the more expensive apartments. The more affordable ones across the U.S. on average have only increased about 3%.
And so when we think about the areas where we're seeing most of that rent surge, what types of percentages in surges are we talking about? And do you think that that's sustained, or is it due to retracted anytime soon?
Well, we do think that we're going to continue to see rates increase. Over the last 2 years, you've had two things that have really occurred. One is you had a very healthy consumer and a lot of liquidity into the market through stimulus, which enabled people to be able to afford higher rates. On top of that, you also had a significant lack of inventory on the market. We've been operating at about 97.5% occupancy nationwide, particularly with rental properties. And prior to 2020, 94% would have been considered full occupancy. So what we've got now is an environment where we have higher mortgage rates, which are pushing more people out of the home purchase market, driving them to the rental market, so creating more demand, and significantly contracted inventory. We do see that this will probably continue in terms of rates, and as that continues, we believe it will probably push down into the more affordable housing areas as well, which have not seen the level of appreciation that we've seen in the more expensive apartments side.
Okay, so pushing people who are looking for homes out of the home buying experience and that market and back into, or continuing to keep them within the renting experience as of right now. Where in the economy do you also see that having some of the secondary impacts as well, if people are having to continue to rent or not able to get into a home, which would be the biggest equity building opportunity for themselves?
Right. I mean, we're seeing that pretty much across the board. The number one reason that people are not going into, purchasing a new home right now, according to the most recent Redfin study, was affordability and the ability to get and debt that they already have. What we're seeing right now is in terms of the rental prices and what's going to happen, as we're seeing things, is really a waterfall effect. Mortgage rates are increasing. It's pushing more renters into the market. And then the higher end rental market, as those prices continue to appreciate, it's going to push those renters down into the lower tiers as well. We do have a significant amount of inventory that will be coming online, but note that we're playing catch up from the Great Recession, when new home and new multifamily housing starts, went almost to zero, and we didn't return to pre-recession levels until 2014. So we've got a lot of catch up to do in terms of new inventory on the market to soak up this demand that continues to increase and will be further increased due to increased mortgage rates.
Part of that is also directly annexed to the supply chain issues and even delivering on some of those new homes as well within the real estate market. When we think about millennials that are trying to get into their first home, many of them perhaps looking at some of those new homes and now realizing that the delivery is going to be further out. So now they go into existing homes. What further impact do you see to this group of buyers in the housing market that could have more longer term implications?
Yeah, I mean, there is an impact on buyers for new homes, even to the extent that they're able to afford them, in terms of just when is the inventory going to be able to come online. It's impacting the home builders as well, because they're not necessarily able to keep onto their schedules given the supply chain challenges. So, which also in that way will push more demand into the rental side of the market. So it really is a waterfall cascading effect that we're having in the housing market right now.
Jon Ziglar, who is the RentPath CEO, joining us this afternoon. Jon, appreciate the time and insights. Thanks so much.